I'd like to continue with the discussion about balance of payments by looking at various components within. As we noted before, the overall balance of payments must be equal to zero because of double entry bookkeeping. All the credits have to equal all the debits because of the way double entry bookkeeping works. But there are various components within the balance of payments which might not be balanced. So let me talk about some of the main components, and we'll give some interpretation of them. So the first one is merchandising trade. Now this is, when I say merchandise, that's goods. So that would be cars and wheat and electronics and civilian aircraft, various products that people would use in their daily lives. So products, goods. Services trade has to do with any aspect of international transaction that involves services. That may be, for example, tourism services or insurance services. These are things of value that are not goods, but instead are provided as a service for the current time frame. We also have unilateral transfers, with, for example, provision of military equipment, which is relatively unimportant in the context of this class. So I'm not going to really worry about this. So merchandising trade, services trade, and unilateral transfers all can be added up with the debits and credits. And we'll have a balance. The imports plus the exports, or the debits and credits for merchandising trade balance, which I'm going to denote as MTB, services trade balance, SB, unilateral transfer balance. So again, these are debits and credits for individual components. These combined are generally known as the current account. That is, goods and services which are for current use. So current account balance is a very important aspect of the international transactions of a country. We'll talk about how to interpret that in just a bit, but mechanically, the current account balance, CAB, is just the exports plus the imports, the debits and credits for all the transactions for goods trade, services trade, and unilateral transfers. Okay, so that's not about assets. Now, when we say assets, that we're talking there about the, for example, the ownership of a company, stocks, bonds. It's things that provide income over time, not a current consumption of a good, but instead something that has long-lasting value. And the transactions that occur on the asset side are in what is now known as the financial account. Okay, and this is going to be the private financial account. I'll come back to what that means in just a bit. The capital account has to do with, for example, debt forgiveness and various other aspects that really won't play a big role in what we're going to be talking about. In fact, I'm going to even eliminate that just to keep things a little bit tidier. So we've got the financial account balance, which involves the exports and imports of assets. Now, one thing to keep in mind is that In terms of the mechanics of double entry bookkeeping, the payment for the goods or services will typically be in the financial account. And again, I'm going to have an example for that in just a little bit. Okay, so we've got the current account and the financial account. So is this every transaction that might occur? No, because you also have a final an official settlements balance, OSB, which reflects government sale or purchases of assets. Now, when we talk about fixed exchange rates or foreign exchange market intervention by a central bank, this is where that comes into play. So when we talk about the overall balance of payments being equal to zero, then we have that this relationship, and this is a critical one to keep in the front of your mind. The current account balance plus the financial account balance, and again, leaving out the capital account, that's sort of relatively unimportant one, at least for most countries, plus the official settlements balance must be equal to zero. That's what we mean by the overall balance of payments being in balance. So here we've got imports and exports of goods and services. Okay, so this is goods and services. Here is private financial transactions, and here is central bank and government transactions in the international marketplace. So each one of these things can be positive or negative, but they must add up to zero, always. And if they don't, then there's a thing called the statistical discrepancy, which I'm not going to go into in any great detail, but if this doesn't add up to zero, then because of some transactions that might not take place, say for example, illegal drug trade, so and so forth, you would have this added in. So again, goods and services. Then one thing that I should have mentioned on the services part, the payment for, say, a foreigner working in the United States and sending money back would be in the services account. Okay, so this is an overall view of the components of balance of payments, still using this concept of double entry bookkeeping, credit and debit, split up into individual accounts. And we will be using various components of this throughout these lectures.